Hi, it's Wednesday, March 9th, 2016. Today I'm going to be talking about a very interesting subject, in my opinion. It's the Dow Gold ratio. So basically, that's the price of the Dow Jones Industrial Average divided by the price of gold per troy ounce. And basically, this ratio measures in a nutshell, the preference of investors towards financial assets or hard assets, in this case, gold or real money, in my opinion. And this ratio is, it's very cyclical. The lowest levels we've had, let's say, since the beginning of the 1900s, the lowest the ratio has been was in January 1980, when that ratio on a monthly basis reached 1.29. So that meant that the Dow Jones Industrial Average and gold were basically at the same price. That's when gold reached 887.50 and the Dow was around 800, 850. So yeah, it almost reached 1-to-1. On a monthly basis, it was 1.29. It might have gone near 1 on an intraday basis. And prior to 1980, we have to go back to the Great Depression in February of 1933, which was just before FDR, was inaugurated, and the Dow Gold ratio reached 1.94. At that time, the price of gold was $20.67 per ounce. So yeah, that was the lowest it got back then, 1.94 the ratio. And as you can see now in this chart, we peaked prior to the 1930s, I guess, when the Dow was booming in 1929. We peaked almost at 20, probably around 18. We came back down to 1.94 in 1933, and then all the way up to, I think it was 1966. That's when the Dow Jones Industrial Average topped. We got up to around 26, as you can see in the chart, and then it dropped all the way below 5 in the early 70s, and then we had like a rebound in the Dow Gold ratio, almost back up to 10, and then it just turned around and went way back down to 1.29 in 1980. And from 1980 to the year 2000, or roughly 1999, it was pretty much a one-way street. Gold was in its bear market. And, if you'd bought the Dow at 800 in 1980, it would have been up to 11,000 in 2000. You would have done really well if you'd bought bonds as well. All paper assets did really well. But since 1999, 2000, that ratio has been coming down. The top in August of 1999, the all-time high in the Dow Gold ratio, was 42.19, and then we dropped since 2000, when the bull market in gold started. Gold has been appreciating faster up until 2011. It appreciated much faster than financial assets or the Dow. And as you can see, we dropped in August of 2011. That ratio dropped to 636. But since then, we've had kind of a rebound in the Dow Gold ratio, much like in the early 70s. I think it was in the period between 74 and 76 when the gold price dropped and the Dow probably outperformed. So we've had the same kind of thing happened. We went up on November 2015. The high in the Dow Gold ratio was 1669, and now, as I speak, the Dow is 17,000 and gold is 1248. So the ratio is 1362. So in my opinion, we've topped in that ratio at 1636. And it could be very quickly because if you look at the, in the 70s when we topped near 10 on the rebound for the Dow Gold ratio, it dropped very quickly towards 1. It took a few years. So I think we're going to have the same kind of, action. And the trick is, where is it going to go? Are we going to go back down to around 2 to 1 or 1 to 1? Even if we go down 2 to 1, it's fairly it's difficult to say at which price. We could go to 1 to 1, at 17,000. That'd be gold at 17 and the Dow at 17. But I would tend to think it's going to be more between, it's going to be lower for the price of gold. I just heard an interview earlier today. Pierre Lassonde, the chairman of Franco-Nevada mining company and Business News Network in Canada. And he said, if we go down to 2 to 1, that's 8,000 gold. But it's impossible to say, but you could work the figures, we could go down up to 6,000 in gold, and then the Dow drops to 12, that's 2 to 1. But now I've got another chart here. It's more of a shorter term chart. It doesn't go all the way back to the 1920s. It's from like 1986, 85. And as you can see, it looks like, the rebound we've had since 2011 in this ratio, it's turning now, and it's turning back down. So it will be very interesting to keep an eye on that ratio. So all you need to do is take the price of the Dow Jones Industrial Average, divide it by the price of gold, and keep track of it. And I'll put the link to the website where I got these charts from. It's called macrotrends.net. Very good. They've got other charts as well, not just Dow Gold. They got oil, silver, everything. So that's what I want to talk about today, the Dow Gold ratio. Basically, it's the preference between hard assets and financial assets. And I think since 2000, 2001, hard assets, especially gold, has done a lot better than financial assets. And you can see that by this Dow Gold ratio. Have a good day and take care. Bye.